Leverage can be a powerful tool in trading, but only when understood properly. This video will break down exactly how it works, how it affects the funds traders deposit to trade with, and how to apply leverage when trading on dYdX. So first things first, what is leverage? Leverage at its core is a tool that traders use to borrow additional buying power. And to put it simply, it allows traders to open larger positions than their actual account balance would normally allow. Here's a simple example. Let's say a trader has $100 in their account. With 5x leverage, they can enter a trade worth $500. So that's $100 of their own money and $400 of borrowed capital from the protocol. But why would a trader even choose to do this? And the answer is because it amplifies the outcome of the trade. If the market moves 10% in a favorable direction, the profit isn't just $10 on a $100 position, it's $50 on a $500 position, which is a 50% return on the original capital. But of course, the same works in reverse. A 10% drop would mean a $50 loss and result in the trader losing half of their original balance. This is a crucial thing to take note of. While leverage can enhance gains, it also magnifies losses. This is why it's considered such a powerful tool, but also one that requires precision and risk management when it's used. The next key thing to understand is how leverage impacts the rest of a trader's portfolio. To do this, it's important to understand margin because one doesn't exist without the other. As previously mentioned, leverage lets traders open positions that are larger than the funds that they hold, but to make this all possible, a portion of their own capital must be used as collateral, and that capital is called margin. To put it simply, if leverage is what boosts the size of a trade, margin is what anchors it in reality. It's the trader's own stake in the trade, and it's required to both open and maintain the position. There are two types of margin that work together behind the scenes. The first is initial margin. This is what's required to open a position. Using the previous example, the $100 needed upfront to open the trade would be the initial margin. And the second type is maintenance margin, which is what's required to keep the position open. If the market starts moving against the trader and their margin balance drops below the required maintenance margin level, the position is at risk of being liquidated. And staying on that topic, let's dive into what actually happens when a leveraged trade starts to go south. When the market moves far enough against the position and the margin balance falls below the required level, the trade is liquidated. And what that means in simple terms is that the platform will automatically close part or all of the position. The trader will likely lose most, if not all, of the initial margin they used to open the trade. And this process as a whole stops the loss from growing any further and prevents the account from going negative. To avoid this, setting stop loss orders, keeping leverage levels reasonable, and regularly monitoring margin and account health are all key strategies traders can use to help avoid liquidation. Okay, so let's walk through how to place a leveraged trade on dYdX. First things first is to head over to dYdX.trade and select one of the 200 plus markets which are available. This example will start from having a wallet already connected and funded, so for help with this initial step, there are some 60-second tutorials available on the dYdX channel. And strictly for example purposes, this will show how to place a 10x leverage position using a market order. So to do this, head over to the order panel on the right hand side, choose buy to go long or sell to go short, and select the order type. From here, traders can either use this leverage slider or input directly into this box to set the desired leverage. And as this is adjusted, the trade size here will update automatically just to reflect the exposure at that level of leverage. One other thing that will also update is this margin used indicator, which shows what percentage of the trader's available margin will be used if the trade were to be placed. This circular bar fills from green to red depending on how much available margin is being committed to the trade. It's worth noting, however, that this indicator only applies when trading with cross margin. So in other words, it's showing how much of a trader's collateral is being locked up for this trade, while the rest can still be used to open other positions. If this still feels like a bit of a grey area, then there's a link to a video below which explains the difference between cross and isolated margin. So once everything here has been set and the impact on margin has been reviewed, hit place order at the bottom here. And once the trade is filled, it will appear in the positions tab where the following details are displayed. There's the size and value of the open trade. There's the current profit and loss, which updates in real time based on the market. There's the margin, so the amount of funds set aside to maintain the position. The average open, so the average entry price of the trade. Oracle, this is the current price according to dYdX's Oracle feed, which helps determine liquidations and funding. Liquidation, which is the price at which the position will be force closed if the margin balance drops too low. and funding, which shows the funding payment either earned or paid on the position so far. This value will update over time based on the market sentiment. For a full breakdown on how funding rates work and why it matters, check out the dedicated funding rates video on the dYdX channel. So the key takeaways on leverage are that it allows traders to amplify exposure and potential returns, but it also increases risk. Margin is the collateral that secures trades and determines how much leverage can be used. Liquidations occur if margin levels fall below required thresholds. Leverage should always be used with a clear risk management strategy, and on dYdX, leverage is fully customizable and applied per trade directly from the order panel. To learn more about trading on dYdX, check out the rest of the tutorial series on the channel or head over to dYdX.trade to get stuck in.